Thank you for attending our home buying webinar presented by Provident Credit Union. Our session today should last for an hour with a Q&A session at the end. During the presentation, you'll have the ability to send quick questions to our webinar staff through the questions pane. Simply type in your question and click send. We'll address all Q&A at the end of today's session, and a copy of the slide deck will be emailed to all attendees in about a week. Our first presenter is our mortgage consultant, David. Would you like to introduce yourself?
Thank you, Amanda. My name is David Herrera. I'm a senior mortgage consultant with Provident Credit Union. Been with the credit union 25 years. Been in real estate 35 plus years.
And our realtor, Nick Rowe.
Hi guys, I'm Nick Rowe. I'm one of the brokers and founders of Doorlight. Doorlight is going to be one of the top 1% real estate teams for the Santa Clara County, both 2023 and 2024, and looking like 2025 as well. Cool. So our goal is to help define today what the home ownership objectives are and how to achieve them. And then we're going to go over with David talking about the pre-approval process for the mortgage, which we always recommend before actually searching for the home, so you know how capable you are and how to actually get the home that you want. And then I'll be handling kind of the key metrics with what to do before you start the search, how to narrow that down so you're not just scrolling through Zillow aimlessly, and then summarizing the home buying process for you guys. Let me just move this here. So the steps to a successful home ownership is, of course, we always want to go into the field knowing what the process is like, especially for first-time home buyers. It can be kind of like a fire hose of information where there's a lot of new terms, new processes, and it can be a bit confusing. So we always want to educate ourselves first, usually with a sit-down consultation, like a one-on-one or a seminar like this, so we're prepared to actually get into the housing market. Then the second step we always recommend is to get that pre-approval where the lender is going to actually look at all of the finances and your situation so you know how much home you can afford, and then also what that monthly payment would be. Because it's not just the down payment that you're putting down, we always live in that monthly payment as well. So it's really important to understand what goes into that as far as, home insurance, the taxes for the property taxes, then the mortgage as well. Then you want to set those budgeting goals with your lender, and then working with a real estate agent professional such as myself or any of our Doorlight team members to help you go ahead and find that perfect home, building the parameters for the search as well. So you want to say, okay, what city, what do you need, a single family or a condo? There's a lot of things that we help filter down, so we're very clear when we're getting into the housing market, so you can make the right decision and evaluate the homes properly. Then after that, we find the right home. We always look over the due diligence documents, and then we'll also go over today the offer process as well, which is the negotiation, which in the Bay Area is one of the most important keys for actually getting the home because it's such a competitive market.
Oh, thank you, Nick. Um, well, Provident Credit Union is currently the 108th largest credit union in the U.S. We've been around since 1950, so we're celebrating 75 years being in business this year. So happy birthday, Provident Credit Union. We started off as California Teachers Association. We still have many, many members that are educators. So for those that are members of the California Teachers Association, you are eligible for rate discounts. So just make sure we go over that when we're reviewing your application for your mortgage. And so why choose Provident? Well, why are you here? We are a direct lender. We have unique products. We have been received top awards for top lenders for many years running now. And we take things one client at a time. You're not just a number to us. You're a member of the credit union. And as a result, we take a lot more care of you and make sure that you go through the process, educate as much as possible, and making sure that we're doing what we need to be doing to close your transaction successfully and on time. So the pre-approval process is pretty straightforward. Um, you're going to contact me. We're going to have a quick conversation, and then I'm going to connect you into our mortgage portal system, where you'll be able to log in and create a login and submit your loan application. Um, the system will then ask you to provide supporting documentation to all the information you provided on the application. Once once I've run the numbers and make sure that that all the numbers work on the surface, then I'll contact you and review what the numbers look like, discuss buying power. Uh, then we will order credit. We do not order credit right away. In every single transaction, we want to make sure that the numbers work on the surface first. Then we'll run the credit, finalize all the numbers, and then we'll establish your buying power. That's when we will do one of the most critical steps, and that's preparing your pre-approval letter. And Nick will use that pre-approval letter to then cater to or look for properties in the particular price points. But pre-approval letter is what you're after. And Nick, as Nick will tell you, sellers may not even look at your offer unless you've got a pre-approval letter attached to it. So some of the key factors when going through the pre-approval process, these are key indicators. They help establish your buying power. So obviously your income, the type of income, salary, bonuses, commissions, self-employment, RSUs, stock, grants, things of that sort. They're all treated a little differently, so it's critical that we take a look at each one of those income sources and isolate them and properly review them so that we don't I'm not making any mistakes in regards to your final debt to income ratios. Credit score is important. Credit score is very, very important. And it's just as important as any other factor. So maintaining your credit rating, making sure you're making your payments on time, making sure that you don't have excessive debt. Those are all very important key factors. And then obviously your assets. There's three buckets of cash that you're gonna need when you purchase a home. You're gonna need the down payment, you're gonna need the closing costs, and then you're gonna need what we call reserves. Reserves you're not gonna spend, but the down payment and the closing costs you will. And we need to verify that you have sufficient cash assets or stock to be able to cover the down payment and the closing costs. So there's a couple of different types of mortgages, primarily fixed rates, adjustable rate mortgages. What's popular right now is these adjustable rate mortgages or ARMs. Fixed rates are typically higher than ARM products or these adjustable rate mortgage products. But these adjustable rate mortgage products have initial fixed periods. They're not straight adjustable, so they do have initial fixed periods that allow you, 3, 5, 7, 10-year terms, so that you can get into your home and get situated and have some time, um, you know, uh, before your rate can adjust. We have some interesting features that are attached to these products. We can spend more time on them when we talk. Again, fixed rate mortgages are going to be higher in rate. Adjustable rate mortgages are going to be lower in rate.
Cool. So thanks for that, David. I always learn a little bit when we're on the seminar. Even when we're in the field every day, it's always nice to see the other side of the process because typically we get the clients and then we send them over to David to do the pre-approval and then he sends it back to us for the letter when they're ready to go. So let's do a quick introduction on Doorlight and then we'll go into the home buying process. So Doorlight is a brokerage in Santa Clara. We are a tech-based brokerage, so very fast-moving, and we've become one of the top producing teams in Santa Clara County. We have a lot of different programs as well for our buyers who work with us, and as well as the sellers who are looking for a better solution for real estate. But let's go enough about Doorlight and actually jump into why we're here today with the process of buying a home, what the steps look like, and then also where we begin with everything. Amanda, if you could do the next slide, please. Okay, so why choose Doorlight? Well, talk about this a little bit. We have lots of different, like I said, unique programs for buyers. So we are running a special program right now where if buyers come through us, they can get up to 1% cash back for their first time purchase. And this is, of course, subject to lender approval. So when we have any type of these offerings, we always want to make sure that we send it over to David so he can make sure that we're able to use all of the credit available. And then I think is well with David and Provident Credit Union, we're actually a preferred brokerage. What that means is sometimes you get an additional discount with going with Doorlight and Provident than just going with Provident and a different brokerage. Doorlight, we have licensed professionals, so we are, licensed real estate brokers or real estate agents. All of us have lots of experience in the field in Silicon Valley, with most of our agents actually being top producers on their own, not even just as part of the team. And then again, it's a very technology driven real estate experience. So we're really catered more to the high tech industry here in Silicon Valley. So let's talk a little bit about the first step in building your home search, because most first-time home buyers, and I was guilty of this myself, when we're thinking about buying a home, a lot of times we just start scrolling through Zillow and we might see properties all over the Bay Area or even in different states. And that's not really a way to dial in with the housing market. Silicon Valley and the Bay Area is going to be one of the most competitive real estate markets in the world, which means things operate here very differently than the rest of the country. Because of that, when you're going into buying a home, you need to have a clear plan on where you're looking for and what you're looking for to actually get that home and to secure the best deal for you that meets all of your needs. So what we like to do here at Doorlight is we've refined it down into 4 different steps to simplify your search and start to narrow it down so you can get an idea of what you actively need for your home. Again, this is going to be a first-time home buying seminar, so you're not always going to get your perfect dream home for the first home. The name of the game in Silicon Valley is to get the home that meets your must-haves, where you can start building up that equity, and then later on you trade up to the next home. It's a lot like Monopoly is what we're trying to do with home ownership, because it's just such a powerful force for building up equity and historically building up wealth as well. So the 4 key factors that we look at is going to be family, expectation, experiences, and location. So family might be, how many bedrooms do you need to support your current family? Do you need a 3 bedroom? Are you okay with a 2 bedroom? Does it have to be a 4? This is going to be a very specific, to your current situation. And then maybe you want to look down the road a little bit as well. If you're expecting maybe you need a bit more room, that could be a reason for change or to move. Expectation, what do you need to have inside the house or the lot? Do you need to have a big backyard? Do you need to have a, open concept? Is that what you need or is that what you want? So all of these building the home search, when we do that one-on-one consultation, we go down and we narrow the list on nice to haves, must haves, and can't compromises. And in real estate, typically you're going to be left with 5 of must haves that you're able to actually lock in. If you start going for 6, we have to go down because everything is going to have some sort of a compromise. Unfortunately, I haven't seen the perfect home that checks all of the boxes, especially for first-time home buyers. A lot of times it's with the reality, with the budget. What do we need to have to get the home that we are going to be able to enjoy? You can do the next slide, Amanda.
Hey, Nick, I've got a question for you.
Yep.
Hey, you mentioned something about first-time home buyers and not necessarily finding everything they want in their first home. Is that very common? Does that happen a lot?
When I say not finding everything they want in their first home, I might have misspoke a little bit there. What typically happens is when we get into the home buying process, it's a lot more of a journey. So we typically call it a first time home buying journey because when you start and you're seeing the homes on Zillow, it's very different than when you're actually going into the homes on how the pictures look, how the layouts look, and what you want to have as well. So a lot of times I'll have clients that will come to me where we'll have a long list of things that they're like, okay, I'm not going to put an offer unless the home has this like 15 things on the list. But when we actually start looking at the homes, what they want and what they need actually starts to develop differently. And they always, end up with a home that they love. It's just not usually what they thought they wanted before they actually started getting into the search. So
Got it. Got it.
yeah. I always tell my
Right.
clients, if it's 1 month or 3 months, your tastes start to develop when you start looking at the actual homes and when you start going to the actual homes. So I appreciate you calling it out there because I don't mean to discourage anybody. When you're buying a home like this, it's such a expensive, asset or so. Nobody puts an offer on a home that they don't want to buy. People only
Right.
put offers on homes if they're going to be very happy with it and they want to live in that home.
Thank you.
Okay, so let's go and talk a little bit about the different types of homes. So, ones that you typically hear are going to be single family homes. That's when most of us are thinking about a home. We're thinking of a single family. It's detached, it has a lot, it doesn't have common walls. It's going to typically be the owner's responsibility for taking care of the property. And then our other class of homes is going to be more townhouses or condos where there's typically a homeowners association where it's not just going to be the mortgage payment that you're going to be taking on and being responsible for, but you're also going to have a homeowners association payment as well. Typically, with a lot of HOAs, they are going to have different benefits and amenities for the owners. Like they might take care of the roof, or they might have a pool or a playground inside of the community. So it's not one is better than another. They all have different pros and different cons. But this is definitely something you want to think about when we're going over the expectation for the filter when looking for a home. Now, this is also going to be something that you want to think about when you're purchasing a home here in the Bay Area. If it's a very fixed up home in a nice location, it can be extremely expensive to enter the market. So a lot of first time home buyers are sometimes thinking about the buying a fixer upper and putting a little bit of sweat equity into the property to remodel it and to make it into what they want rather than buying the one that's already a finished product. So they both are going to have pros and cons associated with both approaches. If it's a fixer upper, it's going to be traditionally more of a lower price, but you also have to start calculating a few different things like the cost to actually fix it up, and then also the time it's going to take to do the fixing up of the property. Because if you buy a property and you have to, hold it for 3 months to 6 months for you to actually move into the property, that's going to be an added expense, not just with the remodeling cost. On the other side, buying a turnkey property is very attractive right now, especially with so many people in, the tech jobs. They don't have time to manage the product or the project. They just want to move into something that's ready to go. But that's always going to be a bit more competitive because lots of people just want to have a house where they get the keys, they move in, and they're done. Okay, so when you're ready to buy, I always say that real estate can be a process where it happens very slow and then very fast. What I mean by that is with all of my clients, whether we're looking for 1 month, 2 weeks, or 3 months, whenever they find the right property, we have to move quickly. The reason for that is in the Bay Area, a lot of the good homes are selling within 1 week to 2 weeks for the turnaround time. So when you identify a property that meets your criteria, even if you've been looking for a while, you have to be able to act extremely quickly. That might mean as soon as the property comes up on Zillow or as soon as I send it over to you through email, we need to be able to schedule a showing that week, go over and review the due diligence documents, all of the reports to make sure there's no red flags, and then be ready to write an offer because most of the homes, they have the home go up on Thursday. They do one open house and then they review offers by Monday or Tuesday. So this is another reason why we always need to have the pre-approval letter before we start looking for the homes, because in the Bay Area, if I don't have a pre-approval letter as a listing agent, I'm not looking at the offer. I need to see the offer, I need to see the pre-approval letter, and I need to see the bank statement showing the proof of funds, or I'm just going to be talking to the other offers I receive. So same thing on the flip side, when we're helping our buyers, we know that's the mentality in the Bay Area. So we always need to make sure that our file's ready to go and we're able to go and actually, see the home and to put in those offers quickly. Another thing is because it's the Bay Area, there's a lot of ring camera and video recording devices that are installed on the properties. So I always advise my clients, we discuss the properties outside after we do the showing. When we're inside of the property, we're almost like ghosts where we see, we make mental notes of things that we want to evaluate and have questions on. but we never want to discuss pricing strategy or the condition of the property or anything like that when we're there. Also in the Bay Area, a lot of times we'll either remove the shoes or we'll do shoe coverings when we're entering in the house, just so we're not, we're not tracking dirt or anything into the property. And then the last thing is you don't want to bring, the whole family when we're first looking for the homes. If we're very interested, we can always set up a private tour to go and see it afterwards. But when we're doing the open houses, a lot of times we're seeing multiple properties and we need to move very, very quickly. So it's good to have just the key decision makers for that initial, tour that we're doing, and then be able to, schedule those follow-ups if we need to. Okay. Again, I'm emphasizing here that please do not make negative comments when we're viewing the home, because we never know who's listening, whether it's the agent, homeowner, or the camera. There's actually been cases where saying the negative homes cost a home buyer more money because the seller heard those negative comments. I saw a news article about this, and they ended up telling their agent, "Oh, this was the client that said that. We're going to counter them for hire." Right? So we never want to say anything when we're in the property that's negative, because that is going to be information that we don't know who's listening and how it's going to come back to bite us. Again, we want to be fast, and then we typically tend to not use the bathroom in the homes that we're viewing. Reason for that is a lot of times listing agents don't even bring toilet paper. And trust me, you do not want to be stuck in a property in an open house or something if you don't have toilet paper with you. So we always try to go before, at a public restroom. These are just some of the pro tips to make sure you're never in those awkward situations. Okay, so next we're going to switch gears a little bit and we're going to talk about a CMA. And what a CMA stands for is comparative market analysis. So this is going to be how we get the value for the home. Because homes, they don't have a MSRP where you can look up and see the recommended price. There's tools like Zillow and Redfin, they have their estimates, but depending on the market, they're not going to be too accurate. The reason for that is there are algorithms that pull from the whole zip code, and they don't know anything about the condition of the property, which way it's facing, if it's by a busy street or something. They just don't see that with their algorithm. So it's really important that you're using a trusted agent who knows how to accurately pull comps for the CMA to give you a good idea on what the market value is for the property, and to give you an idea of, what it should appraise for as well. As agents, we're not appraisers, but it's one of our jobs as we're going through the property and we're putting down the price. A lot of times in the Bay Area, you might have to remove an appraisal contingency. So you want to see if there's market data around that is backing up the number that we're putting in before we put that offer in, or before we consider removing an appraisal contingency, to make sure we have a good chance of everything coming in correctly. So when we pull the CMA, we're always looking, typically we'll go 30 to 90 days back, and we want to stay within the 1 mile radius because that's what appraisers do as well. And we want to look for the same things like same schools, bedrooms, bathrooms. We don't want to have too big of a house if we're evaluating a small house. And then based off of the condition from the photos for those properties, we come up with a pricing analysis for you to show you what we believe the market value is. Okay, so this is the fun part. Once we've found the right home and we've reviewed all of the disclosure documents, it gets into the offer process. So when we decide that we're ready to submit an offer for a property, we always want to, look at all of the different terms on how to structure the deal. A big thing is going to be what contingencies we're going to offer for the property. Now, a question always comes up, what are contingencies? And contingencies are when you're a buyer and you're submitting an offer. Contingencies are a way for you to get out of the offer without, putting your 3% deposit down at risk. So in the Bay Area, it's very common a lot of times in a competitive market that you have to put a non-contingent offer. So that means no buyer inspection contingency, loan contingency, or appraisal contingency are the big three contingencies we usually look at. And if you put an offer without those contingencies, if something goes wrong tomorrow and you have to back out of the deal, you a lot of times stand to lose the 3% deposit that you put down. So we always want to carefully evaluate what contingencies we're going to put into the offer, or not put into the offer, and understand the different risks associated with it. And then also understand how competitive the property is going for, and if we're okay to take those risks to try to lock in the property and to secure the home. Now, once we've written up the offer, I always review the offer step by step with my clients, because it's very important that they, understand exactly what they're getting into. Once an offer is accepted by the seller, it's legally binding. And in California, it's one of the only states where we don't send the offer out for a lawyer review before you put in an offer. That falls on your agent's responsibility to go through the offer with you. So we always sit down to make sure that our clients understand everything at a very high level and are very comfortable with what we're putting forward. So that's always the second step. Then we present the offer to the listing agent. We might have back and forth negotiations. And when we submit an offer, there's always three different actions the seller can take. They can either accept our offer, in which case we're all happy because we're in contract, or they can reject the offer, which means they're not even going to consider it. They're just saying no outright, or they send us a counter offer. Now, when they send us a counter offer, the way that that looks is now we're able to respond ourselves. So now we have the power of the sellers, where we have three choices. We can either accept the counter, reject the counter, or we can counter the counter. And everything keeps going on with that way if it's a counter situation until it either gets accepted or rejected. Now, I think that goes over the offer process for that, but there's a bit more strategy that obviously goes into it as well when we're preparing the offer, to talk to the listing agent. Some of the tricks and keys in the Bay Area are, we want to see the competitiveness of the house. So there's different metrics that we track as a top 1% team, where we go over how much disclosure packets they have downloaded, how many groups they had through the open house. And all of these let us sort of build a model on what type of offers to expect and what type of offer we should write along with our CMA. So it's a lot of strategy. It's a lot of chess when you're doing the actual negotiation for the offer process. Cool. So I think I'll let you talk about this a little bit, David. I think this is going into the
Sure.
estimate of the closing costs.
Sure. So I mentioned closing costs at the beginning of our presentation when I was describing the cash needed to close. So again, we started off with the down payment and the closing costs, and this is just a sample of some of the closing costs that are involved in buying a home. There's a lot of different vendors involved in the loan process. Um, you've got appraiser, you've got credit reporting agency, you've got the county, you've got a title company. So this is just an idea as to what typical closing costs are going to run you um, in this price point. Now, Nick had mentioned, the rebates he can offer through Doorlight. That's very, very important because of the fact that those credits that are offered through Doorlight can help offset these closing costs. So it's very, very important, and it's an intense or an excellent opportunity when doing business with Doorlight, where you can possibly get some credits for some of these closing costs. So, and these are typical closing costs. They may be higher or lower by lender, but you should expect, 1.25% of your purchase price, just as an estimate of your total closing costs. For 1.25% of your purchase price, I should say, sorry, as an estimate for your total closing costs in a transaction. When we get further into transaction, then those closing costs, they become tighter. They're refined until we get to closing, where you're going to get a final number that you'll need to wire over to the title company. But this is just an idea of what what makes up the closing costs in a typical transaction.
Thanks, David. So I think this is going over, again, the California purchase agreement. So in California, the most common contract that we see is going to be from the California Association of Realtors. It's called the California Residential Purchase Agreement. And there's going to be a few different things on here. There's also the PRDS, which is going to be the Peninsula version of that. But typically in Santa Clara County, Alameda County, even San Mateo County, it's mostly going to be the California Purchase Agreement. So you always want to review that with your broker, your agent, to go over it. And then three of the things that we have on here are going to be the inspection contingency. That is contingencies by nature are going to be active removal. Now, what that means is that you, by default, have these contingencies unless you actively decide I'm going to remove the contingency. So in the contract itself, it's going to have like a 17-day period for you to do any inspections for the property, unless you decide to shrink that number of days or you decide to actively remove the contingency because there might already be a home inspection report, a termite inspection report, and you feel comfortable after reviewing that to remove it. Same thing is for the financing. That is going to be about getting the loan for the property. So you have the option to remove it, but by default, it's going to be on there as well. And appraisal as well is going to be another contingency where you can remove it, but part of the loan process is going to be once we get into contract and we send it over to David, David's going to go ahead and order the appraiser, which is going to be a third party that comes from the bank to make sure that the purchase price that we put down is going to match up with the market value. So the appraiser is going to do their own independent assessment of the property and the pricing, and then they're going to give a appraisal report. So if it goes down a little bit or up a little bit, you want to have that appraisal contingency in case it is below, because you'd have to come up with the extra to cover the gap for the percentage. But typically with my clients, I don't have issues with appraisals. I actually just closed one with David. What was it? On August 7th, our purchase price was 1.525 and we appraised at 1.6 something. So you always want to make sure it goes back to the comps. Again, appraisers are never sure things because we don't control them. The lender doesn't control them. But you always want to evaluate all of these contingencies before putting in an offer. Another thing that we have now in the California Purchase Agreement, which is a bit of a law change that a lot of first-time buyers are hearing about on the news, is the buyer agent commission. The question comes up, okay, how do buyer agents get paid? And the reason for that is, over the last, I don't know, like 50 years or so, it used to be when a listing was signed and the listing agreement signed the listing, they would take a section for themselves of the commission and they would offer to share a portion of that with the buyer agent. Now, these days, we don't have that shared structure built directly into the listing agreement. Instead, what happens is a buyer will actually sign a buyer broker agreement with the buyer, and the buyer agent signed that. And then in the offer, you would put into the offer, I want you, Mr. Seller, to pay my buyer agent commission. So that's how we see it done now. It's not just in the listing agreement. Now the buyers have the ability to negotiate it, and it becomes another term in the contract.
Hey, Nick, I got a question for you. Do the contingencies impact the strength of the offer?
Yeah. So in the Bay Area, especially when it's a very competitive market, if it's not non-contingent, you have a very low chance of actually getting the offer accepted. The reason is because the seller, they want to have a sure thing and they want to have basically the knowledge that if they accept your offer, it's going to go through, you're not going to have any hiccups, and they don't have to go back to the market. And if they do have to go back to the market because things happen, they want to know that they could collect the 3% deposit that you put down. So one of the terms for the contract is you have to put down a 3% deposit. Typically in the Bay Area, we see it in about 1 business day. And if you're non-contingent, you could stand to lose that 3% deposit. And that's what the sellers want to have, sort of that assurance that if something goes wrong, if they accept your offer, they could be compensated for damages. So, you can go any type of contingency that you and your agent discuss on the strength for the offer and the strategy for the offer. But typically to get an offer accepted, if it's a very competitive house in a competitive market like the Bay Area is, we're going to see non-contingent. And that's different than, I think, almost the rest of the country. They typically have these contingencies where even in the Los Angeles area, a lot of times you'll have contingencies for, inspection and things like that. But as soon as you get up to Silicon Valley, it's just such a competitive market. That's just the normal that we see up here.
Cool. Thanks, Nick.
Thanks, David. That's a good point. Thanks for bringing that up. Okay, so next we're going to go and talk a little bit about the team. So everything that's happening with this transaction and with your home buying journey, you need to have a good team around you that you feel very comfortable and very confident in going into real estate battle that we call Silicon Valley in the Bay Area. So you are the CEO. What that means is that you are the one who is calling the shots and is making the decision with every step of your home buying journey and process. We're just here to advise you and to give you the knowledge to make the best decisions. So I always tell my clients when we're looking at the different homes, I don't care if you buy this home or if you buy that home or what you put down for the offer. My job isn't to buy the home or to make the decision for you. My job is just to give you enough information that you feel comfortable being in that driver's seat. Basically, our job with the education and with everything that we're trying to do today is to make you feel comfortable driving the car like it's almost like driver's ed for real estate, to give you the knowledge on what the stoplights mean and what the different signs and turn signals. So when you're in that process, you're able to navigate the market successfully and find the right home for you and for your family. Now, it also matters who we're going to have as far as the lending side of things, because like we talked about with the loan contingency, a lot of times we have to remove the loan contingency. To feel comfortable in doing that, we need to know that we're fully approved with the lender and that they have a very, confident, they're very confident in our file that it's going to go through and we're not going to have any problems. So we're okay to remove that contingency. So it matters who the agent is, it matters who the lender is, it matters pretty much who your whole team is that's going out to fight for you. So I think we're going to go ahead and switch into the Q&A portion now.
Do we have any questions, Amanda? Any questions pop up?
David, you have one. Are there special mortgages or rates discounts for government employees?
Well, we do have discounts available for several different types of relationships. Um, Certain companies, select employee groups, or educators. We do not have anything available currently for government employees, but it doesn't mean that a program does not exist. So, you're always encouraged to check with the county, the state agencies to see what may be available. Just understand that any kind of county or state agency programs, those dollars usually are exhausted extremely quickly. And you gotta kind of be ready, way ahead of the curve, to take advantage of something like that. So, but there are some options available through Fannie Mae, where if you meet certain income criteria, where Fannie Mae will waive some fees, etc. So that a little bit here and there, but there isn't. I don't know of any available funds right now for government employees.
And I'm a Provident Credit Union member based in LA. Can I still use Provident for my home buying process?
Yes, you can. And so we could talk offline, but there is a process that we've developed to even if you're outside of the Bay Area, where we can make you eligible as membership, and we can take care of you. That's not a problem.
Okay. And also, it looks like there is a special from Doorlight that we didn't go over yet. Would you like to mention this real quick?
Yeah, so we do have a special agreement for the people who are on the seminar right now. If you're interested in working with Doorlight and with Provident Credit Union, definitely reach out to us, and we'll send over that 1% cash back rebate agreement to make sure that you can lock it in before the program expires or if it changes. So again, like we talked about with having the buyer broker agreement, that would be in the contract here. So you'd be guaranteed to get that when you're going through the home buying process.
That looks like all the questions, but again, everyone who is here today will get a copy of the slide deck with David and Nick's contact information if you do have any other questions you think of, or if you want to move forward with working with Provident or Doorlight to purchase the property. So thank you everyone for joining us today, and have a good rest of your day. Thank you,
Thank you,
David. Thank you,
Amanda.
Nick.
Thank you.